So, looking at the pound dollar here, it's a 5 minute chart. I just popped on just to see what was available. And it looks like we had a Judas swing here, taking out the buy side here. So let's annotate it. Everything above. What just happened? Yeah. So this low here, going into this buy side and bounce, sell side and efficiency, we have sell side stacked here, here, below that low, and here. So what I'm watching is this last up close candle on the 5 minute chart. Draw that down here. And then we'll drop down into a 1 minute chart. Make this nice and easy. So what I want to see it do is I want to see it trade below that. Now notice all these candles here. It's that 5 minute short block. You see how using just the 1 minute chart, it could be confusing. You might think that this is the bear short block to trade up to go short from. I'm not looking or requiring to that. It can, but I'm not requiring that. If it were to just to roll over and never trade up to this candlestick's open, if it broke below there and came back up and touched it, that would be enough for me to anticipate a run below these relative equal lows and into this buy side and balance, sell side and efficiency, which is a discount array at the present. Now, I like the idea of it trading down here, then coming up to engage all this buy side resting above here. So just for completeness sake, let me annotate some of you guys are probably missing the ASMR of the loud clicking surface being pressed on the built-in Surface Pro type modem. Your laptop. It's real quiet, except for the fan running on it right now. So we'll see what we see here. Again, like I said, I'm not interested in requiring price to trade up there. If it does, I'll enter there on the short. But I'm looking at more or less a run here and then come back and touch this line, which is again that 5 minute bearish order block opening price. So part of spot side of balance, sell side efficiency. If you look at it like this, I just picked up on my yeah, there we go. That's what we're looking for. Folks that are watching and thinking, why would you want to go short there? Why wouldn't you want to see a long to go and get those relative equal highs? Well, it's the day of the week. It's Friday. It is also this run up. They can leave this here for later today or to next week. It's fine. But I think that this, taking out these lows here, that's a shift in market structure. All right, so now we have the setup primed. I could do it as a limit order, but just to prove to you it's not market replay, because I know some of these noobs that watch my stuff, they think that I'm doing market replay. Market replay will not let you show this up here. Okay, test it for yourself. This is the part that makes it very difficult for new students or new traders. They don't wait for their setup. They simply try to anticipate the setup because they're afraid they're going to miss the move. I'm not afraid of missing the move because there's lots of moves intraday. So we're trading down into the low of this buy side and balance, sell side efficiency that I'm anticipating behaving as a inversion fair value gap. Obviously, we not trade up into this candlestick's opening price, which most individuals on Instagram, TikTok, and YouTube, Facebook, X, Discord, you name it, Telegram, they'll say this is the bearish order block. It's not. Okay, and unfortunately, just because they use my vocabulary doesn't always equate to understanding what it is that they're trying to press upon you as prowess. It's not. It's not there. That's why they live in hindsight. So the return up into this candlestick's open, that would be permissible too. So it doesn't necessarily need to trade here. So what's in close proximity to that line? Again, this line is the 5-minute last up close candles opening price inside of this price run that's seen on the 1-minute chart. Notice this line here. I know it's very hard to see. Let me darken it up a little bit. It's not much of a darkening, is it? Let me see. There we go. We want to see price stay in this portion of this buy side about sell side efficiency. There's no necessity for price to get up into this area here, which is the reason why I wasn't interested in that as a bearish order block on the limited chart. This little gap in here, that's enough to send it lower, and it could just leave without touching the order block. So what I'll do is I'll wait for it to touch the low of that buy side about sell side efficiency. I'll put one on in as a insurance policy in the event it just runs away without me going to the order block. At least I have something on the. Not yet. You got to be patient. I'm watching the candlestick. There you go. That's what I want. So now, small position like this, we can put a stop just above consequent encroachment of this buy side of sell side efficiency. It's really, really modest risk there. So now I can wait to see if you'll permit me, I'm going to take the. Yeah. Rotations off on the executions. I'll place them back on in a second. I just want to watch inside this price action. Explaining it before you do it is a handicap. So it's not as easy as it makes people think when I'm doing it. It takes a great deal of focus, and you have to understand what you're looking for. You have to have a really solid understanding about what you're looking for. Otherwise, it's very hard to stay focused, and that's why it's very difficult to teach live. It's very difficult to, especially using lower time frame charts like this. It's hard to articulate every facet that is going into the idea that leads to a trade setup and or execution and framing risk and whatnot. So if we are looking for a trade setup like that, that's a pretty good return. It's about 3 to 1. Let me see if I can finesse this a little bit. There you go. It's a little bit better. So now, because this is a inversion fair value gap, if we can come back up and touch that one more time or inside this wick, okay? If we can trade up inside that, I'll add one more portion of 750,000 leveraged on the short. Again, it's not market replay. Market replay won't show this up here. A little bit more. I want to see just it. There you go. All right, and the stop will stay there. Still very, very modest risk. Okay. And you just simply just let it cook. Now I'd like to see it break below. See this wick here? In all of this little consolidation area, this wick, its consequent encroachment, this level here, right there. I want to see price gravitate aggressively to this and through this. If it can manage to do that and close below it, then that is a very good encouragement. It allows me to feel confident that these relative equal lows will be taken. How far can it go below those relative equal lows? Well, we've referred back to that 5-minute chart, and that's that buy side and balance sell side efficiency down here. So I'm going to go back out to a 5-minute chart so you can see where we're at. Look at the lay of the land. Remember this one over here? This fair value gap. It's a buy side and balance sell side efficiency. And it's below this low, this low, this low. Well, yes, we've already stabbed down through it, but look at the body. See what it did here? It basically lined up with this low and this low. So whenever I see something like that, and I can, I guess, build a narrative that it's likely to go lower still, then I look at this as a shallow run into liquidity. So therefore, I would expect a deeper run lower. And where would that go? Below this low and into this inefficiency that's a discount array. Okay, so back to a 1-minute chart. Now, if it can touch this 5-minute, I'll add one more in it and leave the stop as it is. Banking on the idea that we've already did the work in the upper half of this inversion fair value gap. That dashed line here, that's a line in the sand that you shall not cross. Why? How do I know that? Because we spent a lot of time here, and then we dropped lower and outside of it. So all I'm looking for is a return back into this, which was the original premise. If it would have given me it earlier, I'd be short from there. But now, since it's still offering it to me, I'm not looking at this as a long. Let's put it that way. I'm looking for this as a return to a short-term premium, and then it should aggressively drop out of that and then gravitate to and through this consequent encroachment, that wick, because it's the extreme low that would set the stage for continuation below here. I don't need to trade below the low of the wick. I need to trade through and close below the consequent encroachment of that wick. If it drops here without even going back to the 5-minute bearish order block opening price, which again, let me show you. It's this candlestick right there. Okay, that opening price, that's what you're watching me observe and execute on. So one more tap into this, I'll add, because I feel confident that we're about to break aggressively lower. Nothing wrong with taking a little bit of heat on your trades, as long as everything that you're seeing still is in the correct context of what took place before you took the trade and executed on it. Meaning that as long as it doesn't go above here, everything that sees price go up into that price level is completely permissible. Like that. Okay, so now it should really strongly reject that, because we didn't get to that 5-minute bearish order block's opening price. That's at this line is, okay? And we went back up into this entire range that's shaded in orange is this buy side and balance sell side efficiency. And the lower half of this is where the real work of the algorithm is. Elusive, nobody wants to believe exists algorithm. It's supposed to be buying and selling pressure. That's what they tell you, right? So I'm viewing it like this. I gotta be honest with you. I'm anticipating all the noise that usually comes with me pressing my mouse. It's not there, so it's something I'm getting used to. Some of you are very appreciative of it because you hated that sound all the time. You need a new mouse. Mm, no, you need to accept the fact that some people are going to make their content the way they want to make it. And to be honest with you, I kind of miss it. And because I'm bearish and it's a scalp, it's not like I'm trying to call the top in pound dollar that it should just fall out of bed, for 1,000, pips or whatever. I'm suggesting that it's just going to run down into these lows, into an old inefficiency that's a discount. And then it could set this stage to then go back up into this area here either today or next week. Now we want to see it aggressively drop down here and attack that consequent encouragement, that wick. Obsessive compulsiveness, if you believe it, won't allow me to not get $3,000 at this lemon. So I'm trying to squeeze a little bit more out of that. All right, so now we want to keep this stop where it is until we get through this threshold, because this is the marker that sets the stage for confidence, not overconfidence, not I'm right and nothing can go wrong. It just means that if we trade through this consequent encouragement, that wick, on a closing basis, then I can start to work that stop loss down to this high here plus a tick. But it has to do this part first. This was the risk I was willing to put on when I first put the trade on here. And I have to sit with that risk until I see a realized confirmation in order flow. No level 2 data stuff required. No depth of market, no ladders, none of that stuff. No market replay required, because when you know what you're doing, you're sticking to ideas and premises that repeat. And since I mentioned that this entire buy side and balance sell side efficiency, the lower half of that, that's what the algorithm is going to refer to. Notice that the bodies stop below that midpoint. Let me take this lower shaded red area, that midpoint, off, because it's a little confusing to me as well. So we traded up into it, but look at the bodies. Bang, stop, not interested even going up there. Not even interested in going to the 5-minute opening price of that order block either. And that is not failure. That's actually what you want to see. If you're bearish, you want to see the inability for price to even get to premium arrays. Because if it can't do that, what is it saying? It's saying that the market is inherently weak. It's lacking what? Strength. So if it's lacking strength, then you can outline a bias that's framing an obvious price run to a discount array. The 5-minute buy side and balance sell side efficiency down here below relative equal lows. Then it goes without saying that you probably have a likely winner. It doesn't mean it's a perfect absolute guarantee it's going to work in your favor and you can't lose. It just means that I'm watching this fair value gap, by the way. This means that you have something that you can engage in. Isn't it nice? Almost like I know what I'm doing. We're watching that consequent encouragement right there, and we're going to see how it delivers sharply and through it. That's what we want. All this wick in here, watch the consequent encouragement of that. We've already seen a reaction to it on the high end of it. I'll explain that in a second. Moving down into it here and coming back up, opening, going into the fair value gap, and then repricing lower. We want to see it now, respect it on the upside as a resistance, basically, and then send it sharply lower. This also is an inversion fair value gap. Got a confluence of things here. They're boding well for lower prices. And we're in the last minute of the macro of 350 to 410. Same premise here. We've already worked in the upper half of that inversion fair value gap, so we want to see everything stay in the lower hemisphere. Tap below that and then send it lower. That'd be wonderful. Again, no market replay required. When you haven't done enough work with testing and then forward testing by just reading the tape, no executions, those little supposed dojis and whatnot, or hammers, that can trick you. I promise you, Steve Nielsen doesn't have any understanding of the algorithm that controls price. So you can be fooled by things like that and think, oh, well, this is rejection. It's bullish. It's not. Case in point. I have to be careful because these facetious statements that I routinely include, that's just me being me. And I'm reminding myself that I used to believe this nonsense when candlesticks supposedly had some kind of sway over price. Okay, so we traded right down into that consequent encouragement, that wick. We want to see it go through it now. And you'll see that once we trade through it and close below it, the market should stay heavy, meaning that it should still gravitate towards these lows right in here. Okay, and this is labeled as a minor sell side liquidity pool. No, I know. Some of you are like, can you just make a template? It's so much easier. Can you just let me do it the way I want to do it? I hear you. All right, so we had our close below, consequent encouragement. So now we should see heavy price. Doesn't mean it's going to be a straight shot. Ideally, that's always the best case scenario, but we don't require that. But because we've done this now, I can lower the stop loss and reduce the risk. Okay, so now I have trimmed some of the risk. And because we're below that wick, if you were inclined to, if you say you're brand new and you really need to have that little encouragement, this would be a wonderful time for you to take a partial off, okay? And that would simply be done by changing whatever amount of position you have open. Right now I have 2.2 in leverage short, so I wouldn't take 750,000 off personally, but you could take something like 100,000 in terms of leverage off, and that would satisfy that the impulsiveness to want to just have something in your win column. And I'll just add the execution since it's not going to be a problem dealing anything now. Enjoying the feedback from the members of the free Telegram channel. You're all seeing what the paid mentorship students have been seeing for a long, long time. I'm not that guy that you think I am. Apparently, I know how to trade, huh? Part of marketing. Some of the folks out there that don't understand how I got to where I am in terms of following, uh, the cult-like following that accompanies me. It's all a part of marketing, and you have to have a character, and that's what I used ICT for. That was you have to be polarizing too, because if it's just everybody loves you, think about like for wrestling fans. Like I've never been a fan of John Cena because he's always been one sided, one dimensional, and characters that have flipped from face to heel, they those characters are more entertaining. They're much more dynamic, and that's what makes them loved or hated. And you have to have a polarizing persona on social media. You have to have some kind of divisive um, rhetoric or some kind of an angle to get people talking, and then you make yourself viral that way. And one of the things that I did a lot was poke fun at other people that claim to be professionals or whatever. And I would do it with a demo account, which in and of itself is clowning, right? But the the polarizing views that would begin from that is what caused the train wreck that people would want to come and see, and that allowed me to build a crowd without ever paying for advertising. But unfortunately, some of you just can't accept the fact that that's what that was. And I know how to trade, clearly, but I allow folks to have their strong opinions about me because I know there's another side of the community that will vehemently defend me. Not that I need it, but it allowed my persona to gain traction. And that's what viral marketing is all about. You want to have something that people believe in so much that they're willing to go to war over it. And that's how ICT built this following. Not to mention, it's the best content out there, too. So we're in close proximity. Now, this is about where I would want to take a partial. Okay. So just practicing what I preach. We can do something like this. We'll take 250,000 off. Okay. And you buy that there. And that satisfies that desire to be right. Okay. That's what I teach. That's what I promote. If you look at all the mentorship stuff that I've put out over the years, in the beginning, you're going to want to feel like you've done something correct. Now, since you've done a partial, as soon as you take the first partial, your stop has to cover costs. And then you submit to the idea that the rest of the trade might go against you. And some of you that are highly critical, if this were to turn around and stop me out where it's at right now, you would look at it, well, you left $1,700 on the table. That's stupid. Well, the idea is that you have to grow as a trader to learn to trust these moves. Nothing in here suggests that it's going to absolutely deliver for me. No trade is ever guaranteed. That's why we have to have a stop loss. Otherwise, I mean, I wouldn't even use a stop loss, and I would just go full leverage, whatever the maximum leverage would be allowed. And I would trade every single trade setup like that. But I don't do those things. Why? Because there's inherent risks. And the market could always change on a dime. It can do things that cause wild spikes, wild gyrations, and that might be adverse for whatever position I may hold or whatever bias I may hold for that session, that day, that week, or whatever instrument I'm using. So because it's important to grow gradually in your understanding and not expect overnight success, which unfortunately, social media has promoted the idea that that's possible, where you can have watch a video, listen to a guy or gal explain some kind of a setup or whatever, and it's so easy, everybody can do it. And then you go out there and you find that it's not the case. And my content's the same. Like, I can simplify it like I did with the silver bullet, but still, if you're not properly equipped with patience, understanding what the setup is, understanding where the draw and liquidity is, that fair value gap that forms after 10 o'clock, it's still going to not help you at all because you have just one component to it. And you have to have a combination of ingredients to get blue ribbon results, right? So individuals that are very critical and they leave comments in my videos that only I can see, but I see a weakness in individuals that think just like that, where they'll say, well, in other words, if it comes back up and stops me out and I only take 146.67, and this is a demo, by the way, because I don't trade Forex anymore, but I promised I was going to teach you guys and I'll give you examples. And this is a London session setup. So you're going to be mad. I'm going to see comments. Why didn't you do this in the Telegram channel? Or why you're not live streaming it? Because I'm not a signal service. And remember, I'm doing this because I love doing it. You're asking me to do things I'm not comfortable doing, and that will steal the joy from wanting to do it at all, right? So, but understanding gradual increased knowledge, experience, those things have to be modular. You can't squeeze in, 5 years of experience in a workshop or a seminar or a webinar or one video or a 5-minute condensed video where there's no rant. There's no rant. Here's an ICT or Michael Huddleston video, and I'm going to take out all the most important stuff. Videos or channels that do that, they're actually doing a disservice. You're not learning it properly. And then you see people say, well, I tried ICT stuff and I couldn't make it work. I promise you're not going to make anything work, because if I've given you step-by-step rules and things and processes and protocols, that this is what makes it high probability or changes it from low probability to high probability, then you have to stick to it. You have to learn to engage in that. This is also when it was trading below that low here. That would be a nice partial too, because it's trading into a minor sell side liquidity pool. It touches the top of that 5-minute buy side and balance sell side efficiency, that little pink area. That could also be a partial. Over the years, when you get more confident that you feel like you've properly positioned yourself in a move, then you don't have to do any partials. That's a little bit hard to do. Admittedly, it took a long time for me to get to that frame of mind. I could see a lot of moves when I was coming up as a 20-year-old, and the impatience of, I just want to be right. I want to be right. That as a young man, I struggled with that a lot. And one of the best tools to combat that is learning to just simply take something off. And when you're not trying to share your results with everybody on social media, it's actually easier to do that, because you paying yourself in a well-funded winning trade, but before it's closed and has full realized profit. In other words, full realized profit is when this limit order gets hit, and then everything in this trade collapses. The stop goes away, the position profitability or open profitability, the P&L for it, ceases to exist, and then you are now at a finite closed position where, hey, this is all you got. You can't make any more, you can't lose anymore. That struggle until that happens, like, this is the finish line here. The entire time you're in the trade, you're wrestling with, what if it goes even lower? Or what if it never goes there at all? Those constantly come up in my mind too. But when I have those thoughts, I remember, I've been doing this for 33 years. What have I seen happen more times than not? See, that's the benefit of back testing, then tape reading, forward testing with a demo, and then going in trading with real money and doing it for years and decades. You lean on logic that you have seen happen, and you can't get that same experience from a book or even watching all my videos. It doesn't translate like you want it to. You want it to be like you watch something or you listen to someone and you feel like, okay, all I have to do is hear it one time and I'll be able to determine if that's real good or not. When you don't have any experience as a beginner or as a new student, you have no foundation to lean upon. Everything's a new experience for you. So remember the first time you dated, the first time your girlfriend held your hand, that feeling of you can't even think clearly. You lost all control. Your mind's racing with all kinds of wonderful thoughts, right? So that's how my children got here, by the way. Yeah, I have tendencies, as a man, and those same things occur when you're a new student in trading. The idea of making a lot of money, that idea of being profitable, see that kind of stuff like that, that doesn't worry me. Even if it comes back and stops me out, it does not bother me because I know there's setups that are going to repeat over and over and over again. That if this gets stopped out, it's okay. It doesn't mean the stuff stops working. It doesn't mean the model's broken. It doesn't mean that they changed the algorithm. It just simply means that I didn't get more than what I got, and it's okay. I made more than 99.9% of you out there that are brand new as traders that don't know what you're looking for. And that's what I had to tell myself every single time as a 20-year-old. When I did it right, I reminded myself, I followed my plan. I followed my strategy. I followed the concepts that I'm forging. And until you wrestle that idea of, I don't need to change anything. I have something that works, but what I have doesn't work 100% of the time. Nothing works 100% of the time. Absolutely nothing works 100% of the time. So you have to submit yourself to the idea that if I know there's a probability of it working more time than not, then all I have to do is manage risk and then simply trade the setup. The setup is I'm looking for price to get below this low. To what degree? It can go down to that inefficiency that was framed on the 5-minute chart. Simple, but hard to do when you're brand new because you see things like this and you're thinking, well, what happens if it turns around and goes higher? Then it goes higher. You can't stop it. You can't stop it. I can't stop it. So you have to simply allow price to do whatever price is going to do. And the best thing that you can do is limit risk, manage risk impeccably, and follow the setup or the idea that you're using to trade. And you have to do it consistently. Don't change it. Don't try to add new parameters to it. Keep it very, very simple. And by doing that, what you'll do is you'll discover all the things that you generally overthink about and you worry about and obsessively, compulsively stress about. Many times they're not even there. The what if scenarios. What if it doesn't do this? And what if it does this? What happens if the trade does exactly what you hoped it would do? That's what you're constantly looking for. I'm looking at this for feedback. Does price indicate that it's still adhering to what I believe it's going to do, which is trade down into this inefficiency? Notice this line in here. Let me darken it up. That midpoint or consequent encroachment of that 5-minute buy side and balance sell side inefficiency, my limit order is above that to get out. So if it comes down and just falls short of touching the consequent encroachment, that still will fill my limit order. I'm not in a rush to jam my stop loss down. This is a very, very crucial thing for your development. Once you take a partial, you've made money. You've taken something out. You move the stop loss to cover costs, and that's it. Then you live in that trade until it delivers what you want it to do, where it trades into your target. There's no other way, folks. There's simply no other way to get to the experience level that you're asking many times in the comment section. When you send me emails, when you send me posts on X, when you send me things, on TradingView, and you comment and you ask, how do I hold trades? How do I put positions on and not have a stop loss that freaks me out, or I put a stop loss where I believe it's not going to go? What gives me the conviction or the confidence? It's the fact that I submitted myself 3 decades plus doing things that are uncomfortable. That's all it is. But because you don't know what it is you're trying to do, even if you watch my videos, it doesn't translate into you knowing how I trade. It doesn't mean that you can go out there and do the same thing, because you are avoiding the very paramount issue of being personally responsible. That means understanding what the content is, the concept, and then going back into your charts and looking for it in hindsight, not just one time, for months. It takes months of studying something. Just like in med school, would you want someone doing surgery on your child or your wife or your husband, your loved one, your mother or father, if they just simply watched a video about doing open heart surgery? They're equipped now because they watched the video? No, no, I wouldn't want to. So you have to treat this trading business that you're building with even greater, scrutiny. You have to allow yourself to say, okay, it's going to take me time. How much time? I don't know. You don't know either. But you have to be willing to submit yourself to whatever degree of adversity and time it's going to require for you to work through whatever complications you have while learning it. And that's a very hard thing to do in the beginning, because you have all these concerns, and mostly it's greed. You just simply want to learn how to make money right now, because in your mind you're thinking, if I can just make money, if I could just get a funded account and get a payout one time, even if it's $500, that's going to be a huge, look at that. It's almost like, oh, you see that? Come on, get down there and give it to me, you jokers. They traded down into the, just shy of the consequent encroachment right there. So you see it wick down into it, but they didn't give me the, oh, now they, come on. Come on, get down in there. Just in case, insurance. And now because it did that, I'll put the stop loss there. Whenever I have an issue where the limit order should have filled and doesn't, I'll bring that stop down if I'm short, and vice versa if I'm long, because it could just simply just deny me. And if you stronghold it and arm wrestle it and say, no, I'm going to demand everything or nothing, it's just, it never really pans out well for me. So rules and processes, that's what it is. So if it comes back and stops me out, at least I made another 1353, hypothetically, right? So seeing it deliver, it's still just as good. And seeing it not fill is something that's also beneficial for you as a student watching. But remember, we were watching all of it up here. And what I was trying to articulate to you is I could visualize how, when we were inside this buy side balance, sell side efficiency, staying in the lower half like this, that's important. And then the market gravitating down to this low and below that low, to what degree? Inside that 5-minute buy side balance, sell side efficiency. So I really wouldn't want to see it trade back up to this inversion fair value gap, because we've already used it here. We failed to go to the midpoint, and then we broke lower and traded below the minor sell side liquidity pool. So, all things being equal, either it takes my stop loss here or stops me out. Either case now, I'm okay with it, because you've watched it deliver where I was saying it was going to go. It just simply didn't execute on the limit order, which is going to happen sometimes. Why does that happen? You're going to ask me that. Sometimes it simply says no. And that stop might be taken, but that's okay. This is why partials pay 100% of the time. There's never been a partial profit that was never profitable. Think about that. It's 100% success rate in taking partial profits. And knowing when to do it, why you should do it, it's all based on things I've already taught. As a new trader or a new student, you might get angry here. You might get mad and cause you to feel like you want to, whenever this trade gets stopped out or goes to limit order, should whatever side it happens to execute on, you might feel a certain kind of way where you feel like you were robbed of something, and you get stimulated to the degree where now you want to have some kind of revenge, or you feel like you've beat them and now you're wanting to go back into the arena like a gladiator. Never, 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 never act on those impulsive thoughts. If you get stopped out, be content with what you've been given. The Lord blessed you with that. Be content with it. Enough is enough. But when you submit yourself to the idea of these intrusive thoughts, where you feel like you have to go out and get more because it didn't pan out exactly like you wanted to do, like in a perfect world, the limit order should have filled. It should have filled on that dive down in there. But if this was your trade and it did that, where it went below it, should have filled but didn't, you now have a new sensation in your mind. You're having thoughts. You're amped up. You have a lot more emotional attachment to what the market has done to you that day. Even in this case, being profitable, hypothetically, because it's a demo account. I don't trade with Forex with real money, okay? But because I'm teaching you, I'm showing you what it is that you're asking questions about, I have to execute, right? So, but if this was your trade, you would feel inclined, because I'm telling you, I did the same thing as a 20-year-old. When the bond market would do things like this to me, I would get really mad. I'd be like, why did they not get me out? That broker screwed me. That brokerage firm denied me. Okay. And now I'm mad about something that's outside of the trade. It's outside of what the trade's still open. So now am I focusing on what the price is doing? No. I'm mad. I'm distracted about something that I have no control over. I can't go back and change it. The broker's not going to say, well, let me go back here and just we'll give you a fill there. And if they do, they're a wonderful broker. I've never had that experience with anyone. The bottom line is you have to stay focused. You have to know what it is you're looking for. Adhere to that logic. Come hell or high water, if the trade stops you out, where you placed your stop with logic, or it gives you your target. And at the end of that trade, whether stopped out or hits your limit order, until that occurs, you have to submit to the original trade idea and the logic that you use to get into it. And it's not easy to do. In the beginning, it's very, very hard. It's complicated. It's complex. It feels like it's an insurmountable task that you will never get past that point. But eventually, if you keep doing it, you do. And far too little people that go into trading ever make it through that threshold. I could teach you until the end of my life. I could teach you everything that I'd be willing to only teach my kids. For the majority of you, it would not help you because you're not equipped to be, number one, personally responsible, or work on the things that are problematic in most individuals, which is impatience, greed, fear. How many times watching this did you feel like the market was going to do a certain thing? And if this was your trade, here's my limit order. How many times did you watch it and think to yourself that this is what's likely to happen? If you were in that trade, you're feeling some kind of anxiety, but you're not really in the trade, but you're watching it. If I could show you how many times individuals commented about how they watch when I'm executing, where my stop loss is real close to price, but it doesn't go there. And they'd say, I was anxious. I felt anxious, and I was watching the trade, and I felt like I was in it, and I would be so scared. Well, it's because you have not done enough in the past. That's the work. That's what even all of my paid mentorship students that failed, and they get angry and they have emotional opinions about me, all they're doing is deflecting. Anyone that comes to me and doesn't see the value of what it is I'm teaching, because I'm actually using the logic. You're watching me use it in Telegram in a setting that's not monetized. I could go on live stream again and say everything I'm saying in that Telegram channel. I'm proving to you that I don't need YouTube. I don't need YouTube AdSense. I don't care. I love teaching. I love it. I absolutely love it, because I remember what it was like when I was a 20-year-old, and I wished there was somebody like me today, and there wasn't.